Resistance and support. A lot of people talk about resistance and support. Stockbrokers talk about it. Speculators talk about it. I had a speculator that I knew that taught me about resistance and support. What he would do is made a fortune in speculating on a stock that was going to break through the resistance. A support is the bottom price of a stock. Say you own a stock, it doesn't matter what it is, Walmart stock, or if you own ORC, or you own PFN, whatever the stock is. It has a bottom price. A bottom price. A price that if it gets, people are going to buy it at. Okay? So it's like, okay, so it's at $10 right now, and then say the current price of the stock is $10, and then you see it go down to $9.70, and then you see it go down to $9, and then you see it go down to $8.50, and then it stops at $8. Everyone will buy it at $8. The stock market supports it at $8. That's its support. It doesn't go lower than $8 because it's too much of a bargain and people are going to buy it at $8. So people are buying it at $8. And then it might start inching up again. But once it gets to a price, say 11 or 12, or whatever this, then there's a price, the bottom price that supports it is 8 on this particular stock. I don't care what the stock is, and I'm not talking about any individual stock right now. I'm just talking about an example. $8 is the support level for this particular stock. Now, it gets up way high. People are speculating, and they're buying it and buying it and buying it and buying it, and then it gets up to $19.95, and then it gets up to $20, and then it stops. It resists going higher because the people who are buying that particular stock will say, well, it's not worth $25. It's not worth it's worth $19.95. It's worth $20, but it's not worth anything more than that, and it stops. It hits up at the top, and there's resistance to the price. Speculators. One speculator friend of mine once, after doing some research, after talking to him and doing some research on the breakaway, if it breaks through that top price, okay, if it breaks through that price, the resistance, then sky's the limit. It could be a limit. It could be it's going to take off. You can buy that stock, and it's going to zoom real high above that resistance level, and a lot of speculators will make a lot of money. They see that it's going to break through. As soon as it breaks through, and then it goes 20, 25, 30, 35, 40, say it's 40, 45, and someone bought it at the breakthrough price of $20.50, they'll sell it. You say, well, why will they sell it if it's keep going up and up and up? Because they take their money and they run. Speculators make their money when something breaks through the resistance level. I'm not a day trader, and I'm not a speculator on most stocks. The only thing I speculate on was QUBT. That's it. And there's another quantum stock I was looking at. I haven't bought it yet. So the resistance, once you go through the resistance level, there's money to be made on most stocks. It's like what happened back when the people wanted to do GameStop. GameStop had a resistance level, and it had a support level, and they were trying to break the support level. The mutual funds were trying to break the support level and make a lot of money by shorting the stock, making it go below the support, and then they would become richer and richer and richer. But when the people on Reddit found that out and they didn't want GameStop to go to nothing, they did something that was unusual. They bought up the stock and forced the price through the resistance level. When they did that, when any stocks breaks through their resistance level, there's money to be made through speculation. You can make 20% on your money, 40%, 100%, 300%, 500% on your money. Yet a lot of people look right at that breakthrough level that they call resistance. The market will resist paying a price for that stock. So if it gets below, then it sets up a new bottom and a new top. There's going to be a new resistance level, maybe at $20, when it used to be the breakthrough level. $20 becomes the support level, not resistance. And then the new resistance level might be $45. So now the bottom price that people are willing to buy the stock would be 20. And the new resistance level would be 45 or whatever it is. But you have to look. There's money to be made if a stock breaks through the resistance level. There's no guarantee on how long that's going to continue to go up and up and up and up. So if you make 20% on your money, 50% on your money, you have to decide at what level you want to sell at. If you know that something has a resistance of 20 and it breaks through that resistance and it goes really quickly to 100, it's in your best interest to decide whether you want to just make 5 times on your money or you're going to risk your capital. Because what goes up sometimes comes down. And it could go below $20. So the resistance level, the bottom price of a stock, is not resistance. It's the bottom part is support. The top part is resistance. A lot of speculators make their money when a stock breaks through resistance. And then they have to decide at what point they want to take their money. Now, say the stock goes from $20, it breaks through the resistance of 20 and you bought it at 20. Or you bought it at 18 or 20. And it hits the $100 mark. Now, it could go to 150. It could go to 101. It could go to 112. It could go somewhere. But as soon as you make 5 times your money, you want to make sure you would like to take your money and run. In my estimation, if I had a stock that I bought at 20 and it doesn't have a dividend, or it's a long-term stock, it's not a long-term stock, and it went from 20 to 100, the best thing is to grab that money. You may decide that 20 to 50 is enough. You buy 100 shares at 20, and then it gets to 100 or 150 and you sell it, you made enough money. Because then, if that price of that stock goes back down again, and it hits that bottom price at 20, which is the new resistance, and you sold it at 100 or 150, you may want to buy that stock again after you sold it, or not. But resistance is the bottom price of most stocks, and then the top price is resistance. The bottom part is support. I keep getting those mixed up. Support is the bottom. The market supports the bottom price, and the market resists the highest price. When it breaks through the resistance, there's money to be made. How much? That's up for the speculators. But I'm talking about resistance. It resists at the top, and it's support at the bottom. Get stock at the bottom price, the resistance price if you can. I mean the support is the price. I keep getting mixed up. The support is at the bottom. You get it as close to the support as you can. And if you're a speculator, you want to sell it when it goes through the resistance. A lot of people wait until it breaks through resistance before they buy it. Some people go day to day to day and wait. They have a first, a last. They do a chart, and I'm not going to cover that chart because that's for speculators. And they do a chart, and they figure which one is about ready to break through the resistance. It's the first, the last, and the high. Something like that. The speculator told me. I never been able to pin it down. But they know when there's some kind of triangle on a chart that they actually plot a chart, and they can see that it's ready to break through, then they buy the stock. Money is to be made through resistance, once it breaks the resistance, but that's for speculators. That's not for long-termers. Buy and hold, for me, is the best way to do stock. If you're a day trader, you can buy stock and sell stock at a profit. If you're not a day trader and you want to be a long-termer, a lot of different strategies to make money. Some people want to do day trading and make a lot of money, and then they invest in long-term. You can do that. A lot of people want to do purchasing stock when it breaks through the resistance, and then they sell it when it gets to 50%, 75%, 150% of what their investment was, and they hedge their losses, because you can hedge your loss. If it gets to, say, 100, if you bought a stock at 50 and say it gets to $125, and you think it's still going to go up some, but you're not sure. You want to hedge your bet by buying that stock at selling that stock at 125. If it goes up to 135, and then it nosedives in the next 15 minutes to 112, and you had it at 125, and you waited for it to go to a little higher than 135, and it dropped to 112, you lost some money. So resistance and support. Support is the base price that a stock might go to. Now, if it breaks through that support level and goes below that, then there's going to be a new base price or support level somewhere down below, unless the stock becomes worthless. But if it's at support and it stays at support, and then it goes up to the top of the resistance and breaks through resistance, there's money to be made. Speculators make a lot of money on that. I'm not a speculator at this point except for that one stock. And the speculation, it hasn't done as well as I would like it to do. So I'm still watching that stock, QUBT. So this is about support at the bottom and resistance at the top, and where speculators make money on the two. Peace out. Live long and prosper. Have a jolly good day. And God bless America.